Viewers at home, you are welcome to my presentation on Ipsas 24, International Public Sector Accounting Standard number 24, Presentation of Budget Information in Financial Statements. Presentation of Budget Information in Financial Statements. In this presentation, I will examine the objectives of Ipsas 24. Objectives of Ipsas 24. Presentation of budget information in accordance with Ipsas 24. Presentation of budget information in accordance with Ipsas 24. Definition of relevant terms in accordance with Ipsas 24. Disclosure requirements in accordance with Ipsas 24. I will also give the format of how to prepare the consolidated budget report, and I will as well solve questions from Ezikan November 2019 Public Sector Accounting and Finance as work example. Please, if this is your first time of coming across my channel, or if you have not subscribed in the past, please go ahead to click on the red subscribe button and turn on the notification bell icon so that you'll be able to receive a notification message each time I drop a new video. If you are a returning subscriber, I say thank you and God bless you. International Public Sector Accounting Standard 24. The objectives of Ipsas 24 is to ensure that public sector entities discharge their accountability obligations and enhance the transparency of their financial statements by demonstrating compliance with the approved budget for which they are publicly held accountable. This standard is to ensure or focuses on ensuring that public sector entities discharge their accountability obligations and enhance the transparency of their financial statements by demonstrating compliance with the approved budget for which they are publicly held accountable. That is the objective of Ipsas 24. Ipsas 24 requires the comparison between the budgeted amount. It requires the comparison between the budgeted amount. You want to compare the budgeted amount. It requires the comparison between the budgeted amount and the actual amount. That is the focus of this standard. You want to compare the budgeted amount with the actual amount arising from the execution of the budget to be included in the financial statements of the entities. That is what this standard focuses on. You want to compare the budgeted amount with the actual amount that arise from the execution of budget to be included in the financial statements of entities which are required to make government accountable to the public. I said IAS 24 requires the comparison between the budgeted amount and the actual amount arising from the execution of the budget to be included in the financial statements of entities which are required to make the government accountable to the public. That is what this standard focuses on. So this standard also requires the disclosure of explanation. It also requires the disclosure of explanation on the reasons for material differences between the budgeted amounts and the actual amount. So that is, this standard also requires that you should disclose the explanation why there are material differences between the budgeted amount and the actual amount in the financial statements. So now I want to define those terms which are used in Ipsas 24. Definition of terms. Definition of terms. Number one term I'm going to look at. So I'm going to look at the final budget. Final budget. What do we mean by final budget? So I want to explain what a final budget means. A final budget is the original budget. The original budget adjusted for all reserves, carryover amounts, supplementary appropriations, transfer allocations, and other authorized legislative changes applicable to the budget period. So a budget is the original budget where you adjust for where you make adjustment for items such as the reserves, the carryover amounts, that is the amount carryover from the previous period, carryover amount, supplementary appropriations, transfers, allocations, and other legislative changes applicable to the budget period. That is final budget. So I will just give you this skeletal format for preparing or for calculating the final budget. So final budget equal to initial budget. Final budget equal to initial budget plus adjustment. That is final budget. I've told you that your adjustment could be in form of the supplementary appropriation. Depending on the question, your adjustment could be in form of supplementary appropriation. It could be in form of supplementary appropriation, whichever one is given in the question. So supplementary appropriation, where that is given, then you add your supplementary budget to the initial budget to get the final budget. So that means you have your initial budget plus the supplementary budget in order to get the final budget. Another adjustment that may be made is reserves. Where there is reserves, so that means your final budget will be initial budget plus the budgeted reserves. So that is for that. Then where there is a carryover amount, that means your final budget will be the initial budget plus the carryover amount. Then where there is transfer allocations, that means your final budget will be the initial budget plus the transfer allocations. So after all these adjustments have been made, then you arrive at the final budget. That is why I said final budget is the original budget adjusted for any of these items. So that is the final budget. Now, number two term I'm going to look at is account basis. Number two is account basis. Account basis. Account basis is the basis in which Ipsas financial statements are presented. The basis in which Ipsas mean International Public Sector Accounting Standards. Ipsas. The basis in which Ipsas financial statements are presented. You know, you can have, it could be accrual basis Ipsas and it could be cash basis Ipsas. So the basis, whatever basis in which Ipsas financial statements are presented is said to be the account basis or accounting basis. accounting basis. Number three terms I'm going to look at is annual budget. Annual budget. Annual budget. Annual budget is the approved budget for 1 year. The approved budget for 1 year is said to be an annual budget or the annual budget. The approved budget for 1 year is the annual budget. Number 4 term I'm going to look at is appropriation. 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 Appropriation is the authorization granted by a legislative body to allocate funds for purpose specified by the legislative or similar authority. I say appropriation is the authorization granted. When there is an authorization to allocate funds is the authorization to allocate funds for purpose specified by the legislative or similar authority. That's why I said it is the authorization granted by a legislative body to allocate funds for the purpose specified by legislative or similar authority. Or I say it is the authorization granted to allocate funds for purpose specified by the legislative or similar authority. Number 5 term I'm going to look at is approved budget. Approved budget. That is the 5th term. Approved budget is an expenditure authority derived from laws. An expenditure authority when there is an authority to incur expenditure, that is approved. An expenditure authority where there is authority granted by law. Appropriation bills, government ordinances, and other decisions related to the anticipated revenue or receipt for the budgetary period. Approved budget is an expenditure authority derived from laws, appropriation bills, government ordinances, and other decisions related to the anticipated revenue or receipts for the budgetary period. That is the approved budget. So, having considered that, I want to consider the presentation of comparison of budget and actual amounts. I've told you that IAS 27 requires that you should compare the budgeted amount with the actual amount. That is the key principles. That is IAS 24. IAS 24 requires the entity to present the comparison of budget and actual amounts of each level of legislative oversight. IAS 24 requires the comparison of budget and actual amounts for each of legislative oversight. And this could include the original and final budgeted amounts. Number 1, we could have original or final budgeted amounts. Number 2, you could have actual amounts on a comparable basis. So actual amounts on the comparable basis. So those are the information to be presented in comparison form. So then the next term I'm going to look at now is information to be presented. Information to be presented in the financial statements. Information to be presented in the budget financial statements. or information to be presented in the financial statements. Number one, in accordance with Ipsas. Number one, I said an entity shall present a comparison of the budgeted and actual amount. You want to present the comparison of the budgeted and actual amount as an additional budget column in the primary financial statements, only where the financial statements and the budget are prepared on a comparable basis. An entity shall present a comparison of budgeted and actual amounts as an additional budget column in the primary financial statements, only where the financial statements and the budget are prepared on a comparable basis. So now, disclosure requirements in accordance with Ipsas 24. Disclosure requirements. What are those information that must be disclosed? By a way of note, by disclosure, it means those information that must be disclosed in the notes to the financial statement. In accordance with Ipsas 24, an entity shall disclose in the notes to the financial statement the following. An entity shall disclose in the notes to the financial statement the following items. These three items I'm going to write. Number one, the budgetary basis and the classification basis adopted in the budget. The budgetary basis and the classification basis classification basis adopted in a budget. That is, an entity must disclose the budgetary basis and the classification basis adopted in a budget. Number two, the period of the approved budget must be disclosed. Number two, the period of the approved budget. The entity must equally disclose the period of the approved budget. Number three, the entity included in the approved budget. The entities included in the approved budget. The entities included in the approved budget must equally be disclosed. So I've told you that in accordance with Ipsas 24, the following information must be disclosed. One, the budgetary basis and the classification basis adopted in the budget. That is, the entity must disclose the budgetary basis and the classification basis adopted in the budget. So number two, the period of the approved budget must equally be disclosed. The period of the approved budget must be disclosed. Number three, the entities included in the approved budget must equally be disclosed. The entities included in the approved budget must equally be disclosed. Now, the next thing I'm going to consider is the preparation of consolidated budget report. In accordance with Ipsas 24. Preparation of the consolidated budget report in accordance with Ipsas 24. In accordance with Ipsas 24, the following may be given. In your question, in your examination question, you may be given the following. Initial budget. You may be given the initial budget and you may be given the actual amount. You may be given the actual amount and you may be given those adjustments. I've told you that your adjustment may include items like supplementary budget, I said you may have reserves. Your adjustment transfers, allocations, and carryover amounts. So you will have the adjustments to be included that may be given. So then, if these items are given and you are to prepare the consolidated budget report, that means you will need to include these two headings. Then you will need to include this to those ones, to the information given. You may need to add. Let me add this to the information given. Number one, you may need to add the final budget. You may need to add the final budget to your question. I've told you that your final budget will be the initial budget plus your adjustment. And where your adjustment is your supplementary budget. That means your final budget will be initial budget plus supplementary budget. Initial budget plus supplementary budget, that will be your final budget. Then you may also have variation on final budget. You may also need to include the variation on final budget. Remember, I've told you earlier that your final budget, I said it will be initial budget plus your adjustments. And where your adjustment is supplementary budget, that means your final budget will be initial budget plus the supplementary budget. Then your variation on final budget, that will be determined by subtracting the actual amount from the budgeted amount, from the final budget. You subtract your actual amount. That means your variation on final budget, that is to determine the variation on final budget. That will be the final budget, your final budget minus the actual amount. Final budget minus the actual amount, that will give us the variation on the final budget. So final budget minus the actual amount. I said that will represent the variation on the final budget. So after calculate, so those are the information required for the preparation of the consolidated budget report. I therefore want to give you the format for preparing the consolidated budget report. The format for preparing the consolidated budget report. Let me have the pro format. So you may have the name of the entity, Elewasho. Let me assume the state is Elewasho state government. Elewasho state government. That is the name of the entity. I'm just assuming the name. Then consolidated budget report. Consolidated, dated, Elewasho state government. Then we have consolidated budget report for the year ended December 31st, 22X. I've told you that we are going to have variation on final budget. Let us assume this is variation on final budget. Variation on final budget. Then you may also have initial budget. Initial budget. Initial budget. You may also have supplementary budget or adjustment. After that, your adjustment, you might have supplementary and other things I've listed. Supplementary budget. Supplementary budget. Then you may also have final budget. Final budget. Then you may also have actual amount. Now, details. To get the after that your actual may be given. Your final budget. I said your final budget will be, if this is column 1, this is column 2, which is final budget. This is column 3. This is column 4. And this is column 5. Now, I've told you that to get your final budget, it will be initial budget plus supplementary budget. That means column 4 plus column 3. That will give us column 2. So that means your column 2 will be column 3 plus column 4. This plus this will give us the final budget. The supplementary budget, I've told you that may be given. Initial budget may be given. Then variation on final budget. I've told you that to get the variation on final budget, you have the final budget minus actual. That is column 2 minus column 1. Column 2 minus column 1. That will give you this. Then you have the revenue of the government. Your revenue, the actual revenue may be given. It may be given the initial budget. So I've told you that your initial plus supplementary, that will give us the final. The final minus actual, I said that will give you the variation on the final budget. Aside revenue, you may have your recurrent expenditure. Recurrent expenditure. Recurrent expenditure. So, recurrent expenditure. So, and you have the actual. The actual. The initial budget may be given. I might be given the supplementary or adjustment. After that initial budget plus supplementary, I said that will give us the final budget. The final budget minus actual, and that will give you the variation on the final budget. Then after recurrent expenditure, you may also have a capital expenditure. Capital expenditure on non-current assets. So the actual will be given, Then you may be given the initial budget. Then the supplementary, if any. Then the total will be the final budget. Final budget minus the actual. That will give you the variation. Variation is just like variance. So you now sum up all this expenditure. No, this is the total revenue. You have the total expenditure. The total expenditure, then the total, then the total of the initial, then you now deduct the expenditure, the total expenditure from the total revenue. Let me have the total revenue to be A and the total expenditure to be B. Then you have the surplus or deficit. If it is negative, it will be deficit. That is, when the expenditure exceeds revenue, then you have deficit. And where the revenue exceeds the expenditure, you have the surplus. Then that is the format for the preparation of the consolidated budget report in accordance with Ipsas 24. I therefore want to take question as work example. And this question is obtained from the past examination question of the Institute of Chartered Accountants of Nigeria. So that is the question. Example: Ipsas 24 on presentation of budget information in financial statements requires a comparison of budgeted amount and the actual amount arising from execution of the budget to be included in the financial statements of entities. The standard also requires disclosure of an explanation. Also require the disclosure of an explanation of the reasons for material differences between budget and actual amounts, to ensure that public sector entities discharge their accountability obligations and enhance the transparency of their financial statements. I repeat, so you may pause the video so that you'll be able to copy out the question. Ipsas 24 on presentation of budget information in financial statements requires a comparison of budgeted amounts and the actual amounts arising from execution of the budget to be included in the financial statements of entities. The standard also requires disclosure of an explanation of the reasons for material differences between the budget and actual amounts, to ensure that public sector entities discharge their accountability obligations and enhance the transparency of their financial statements. Ogoga State Ogoga State government provided the following budget information for the year ended December 31st, 2018. You are given the description, you are given actual for year 2018 in millions, you are given supplementary budget for year 2018 in millions, then initial budget for year 2018 in millions. You are given the revenue. The revenue we have government share of FAAC, Federation Account Allocation Committee, A64112. That is actual, no supplementary. The initial budget is 865,000. Government share of VAT, value added tax, 188,997. The initial is 189,000. Then we are given tax revenue, 46,764. Then initial budget is 43,929. Investment income 475 and 574. 475 and 574. Then we have ace and grants 139 and name. Then we have other revenues. We have 1,404 and name for others. Then transfer from other government 3714 and name. Then the total revenue is 1,105,605, and this is 1,098,503. Then we have the expenditure. We have salaries, wages and social benefits 913324, 39959, 923219. We have overhead cost 559,976, 93239. Then 550 for initial budget, 550,000. Grants and contributions 281,340. Depreciation, impairment and amortization. Depreciation, impairment and amortization 50,362. Then we have bad debts charges 10,809. Public debts charges 1,296. Transfer to other government 5,719. Then we have total recurrent expenditure 1,822,826. Then we have 133,198 and 1,473,219. Then we also have capital expenditure. Capital expenditure based on sectors. We have administrative sectors. We have 88,704. Then we have 87,339. Then we have economic sector 25,330 and 29,183. We have law and justice sector 15,407 and 22,301. We have social sector 35,139. Then and 52,379. Total capital expenditure, and that is total capital expenditure, that is 164,580 and 191,202. Then total expenditure. So we also have budget surplus or deficit of 881,801, 133,198, then 565,918. You are required to prepare consolidated budget report for the year ended December 31st, 2018. Ezikan November 2019. Public sector accounting and finance. Now, let's have the solution to the question. Solution. Solution. The name of the entity in question is Ogoga State Government. So we have Ogoga State Government. Ogoga State Government. You have to prepare consolidated budget report. So we have consolidated dated budget report for the year ended. For the year ended for the year ended December 31st, 2018. Now, if you go back to the question, you have initial budget. You are going to create this column: initial budget, supplementary budget. Now, okay, before that initial, let's create a budget variation of final budget. So we are going to have variation of final budget, initial budget, supplementary budget. We have a final budget, then before actual. So I've told you that we are going to add these two columns, the final budget and the variation on final budget. We are adding it to these three columns to make it 5. So we will now be having 5 columns. So if you add the final budget and variation on final budget to these 3 columns. So now let's have the heading now. So our heading will appear variation on final budget, variation on final budget. Then we have initial budget, initial budget for year 2018. Then we have supplementary budget, supplementary budget for year 2018. Then we have final budget, final budget for year 2018. We have actual amount for year 2018, 2018, 2018, 2018, 2018, 2018. All the amounts are in million. So now let's have this as description or details. Now the first item is revenue. Let's list out the items in order at which they are given. So we have revenue. Under revenue, we have government share of FAC, government share of VAT, tax revenue, investment income, aids and grant, other revenue, transfer from other government, total revenue, then we have the expenditure. Let's list them in order at which we have them in the question. So now the first item, we have revenue. Under revenue, we have government share of FAC, government share of FAC. Then we have government share of VAT, government share of VAT. Then we also have tax revenue, tax revenue. Then we have investment income. Then we have aids and grants, aids and grants. Then we have other revenues, other revenues. Then we have transfer from other government, transfer from other government, transfer from other government. Then we have total revenue, total revenue. So these are the revenues, revenue item. Then now let's write the amount given. So we are given the amount for actual and initial budget. We have the amount for actual and initial budget. So now let's write them for the column of actual, then the column of initial. So now let's have them. So actual and the initial budget. Actual share of FAC. The actual amount, share of FAC, 864,112. Then initial budget. Initial budget is 865,000. 865,000. Then government share of VAT. Government share of VAT, the actual is 188,997. While the initial budget is given to be 189,000. 189,000. Then we also have tax revenue. Tax revenue, the actual is 46,764. 46,764. While the initial is 43,929. 43,929. Then investment income. Investment income, we have 475, and we have 574 for initial. 574. Then aids and grants, 139 is the actual. Aids and grants actual is 139. The initial is nil. Then we have other revenues. Other revenues 1,404. Initial is nil. Initial budget is nil. Then transfer from other government. Transfer from other government, we have 3714. 3714. Initial budget is nil. Then total for actual is given to be 1,105,000. 605. That is the total revenue under actual. Then initial budget. The total revenue for initial budget is 1,98,503. That is revenues section. After revenue, we have expenditure. After revenue, we have expenditure. So now let's write them out as well. Salaries and wages, overhead costs, grants and contributions. Let's write all the expenditures. Let's have them. So expenditure, we have expenditure. Under expenditure, we have salaries, wages and social benefits. Salaries, wages and social benefits. Then we have overhead cost. We have grants and contributions. Grants and contributions. Then we have depreciation, impairment and amortization. Depreciation, impairment and amortization. Then we have bad debt charges. Then we have public debt charges. Public debts charges. Then we have transfer to other government. Transfer to other government. All the expenditure considered so far, they are all recurrent expenditure. Then we have total recurrent expenditure. Total recurrent expenditure. Now, let's write the amount given for our recurrent expenditure in the question. So our expenditure section, we have the amount in 3 sections. Salaries and wages, the actual, the supplementary is given this time around, then initial budget is given. Overhead, so now we want to write out this amount as well. Now let's have them. So we have salaries, wages and social benefits. The actual is given to be 913. Salaries, wages and social benefit 913,324. Then we are equally given the initial budget. The initial budget amount is 923,219. 923,219. Then you are equally given the supplementary budget for that, 39,959. 39,959. Then overhead cost. The actual is 559,976. The supplementary is equally given for that. Then we have 93239. 93239. Why the initial budget estimates of that is 550,000. 550,000. Then you have grants and contributions. Grants and contribution. You have the initial budget. You have the actual 281,340. But no supplementary budget for that. And no initial budget for that. Now, you have depreciation and impairment. Depreciation and impairment. The actual is 50,362. 50,362. There is no supplementary budget for that and no initial budget for that. Then we also have bad debt charges. The actual is 10,809. 10,809, no supplementary budget and no initial budget. Then public debt charges. We have 1,296. We don't have supplementary and there is no initial budget of that. We have transfers to other government. We have 5,719. 5,719, no supplementary and no initial budget of that. When you sum up, your total recurrent expenditure is 1,822,000, then 826. And initial budget, we have 1,473,000. Initial budget 1,473,000. 219. We've done with the recurrent expenditure. Then the next one is capital expenditure, which was based on sectors. Capital expenditure based on sectors. We have administrative sector, economic sector, law and justice sector, social sector, total capital expenditure before the total expenditure. Now let's write them out in that order. So we have capital expenditure based on sector. Capital expenditure based on sector. I will now have administrative sector. Administrative sector. We have economic sector. Then we have law and justice sector. Law and justice sector. Then we have social sector. Social sector. And we have the total expenditure. Total capital expenditure. After total capital expenditure, then we have the total expenditure. Total expenditure. Having written out all the capital expenditures, which was sector based, then we want to write out the amount incurred on those capital expenditure. Now, You are given the actual, and then you are given the initial budget. So now let's write them out in that order. So we have the actual. Now let me first off write out the actual amount. Then administrative sector, the actual is 88,704. The actual of economic sector, which was incurred on the economic sector, is 25,330. The actual amount incurred on law and justice sector, is 15,407. 15,407. And on social sector, we have 35,139. The total capital expenditure is 164,580. Then the total expenditure is 1,987,406. Then after this, you have the surplus or deficit. The surplus stroke deficit. The surplus stroke deficit. Deficit in bracket y surplus. The surplus or deficit is the difference between the total revenue. Let me have the total revenue to be A, and the total expenditure. And the total expenditure is B. So the difference between the two, you are given 881 is negative expenditure exceed revenue. 881, 801. Now, for the initial budget, amount incurred on initial budget, the amount based on initial budget. For administrative sector, you are not given supplementary. No supplementary for any of the capital expenditure. Then we have 87,000, that is initial budget, 339. Remember, those information I'm writing in my solution, they are all given in the questions. So that is why it is advisable you copy out the question before you start watching the solution for better understanding. Then economic sector, and that is 29,183. That of law and justice sector, initial is 22,301. 22,301. Then we have social sector, and that is 52,379. Then the total of the capital expenditure, and that is 191,202 as given in the question. The total expenditure, that is both capital plus revenue expenditure, the total is 1,664,421. Then you have the surplus stroke deficit of 565,918. It is deficit because the expenditure exceeds the revenue. The next thing is the determination of final budget. I've told you that final budget is the sum of the initial budget and the supplementary budget. Now let me number this. This is the first column, column 1. This is column 2. This is column 3. This is column 4. Column 4. And column 5. Now, I've told you that to determine the final budget, I said final budget is the sum of the initial budget and the supplementary budget. This final budget, that is column 2, will be equal to the sum of column 3 and column 4. We have column 3 plus column 4. That will give us this column 2. And since there is nothing in supplementary budget for the government share of FAC, nothing in supplementary budget. So we have 865,000 plus NI. So that means the final budget will still be 865,000. For this 189,000 plus NI, then you still have 189,000. This will be 43,929 plus NI, and that will still be 43,929. This will be 574 plus NI, that will be 574. And this is new. Since it is new, that means the final budget will be new. This is new. Initial budget is new. Supplementary budget is new. The final budget will be new. This is new. The initial budget. The supplementary budget is new. The final budget will be new. Now, having determined for revenue, having determined the final budget, the next thing is the budget variation of final budget. I've told you that variation of final budget, I said it will be the difference between the final budget and actual. So you have 865,000 minus 864,112. The difference will give us the variation, which is 888. $189,000. This column 5 is the difference between column 2 and column 1. Column 2 minus column 1. That will give us the variation of final budget. Then 189,000 minus 188,997. The difference is 3. This exceeds, that is why it is still positive. Then for this 43,929 minus 46,764. This exceeds this. If you have this minus this, it will give us minus 2,835. 2,835 because it is negative. Your final budget of 43,929 minus 46,764 will give us minus 2,835. Then 574 exceed this. So this minus this will be positive. Difference is 99. Then this is NI, 0. Minus 139. So it will be minus 139. And this is 0 minus 1,404. The difference will be minus 1,404. This is NI, minus 3,714. The difference will be minus 3,714. Then we have the total. You now sum up this 88 plus 3 minus 2,835 plus 99 minus 139 minus 1,404 minus 3,714. It will give us minus 7,103. Minus 7,102. Minus 7,102. So that is for the revenue. Now, if you sum up this, the final budget here. If you sum up the final budget, 865,000 plus 189,000 plus 43,929 plus 574. The total is 1,098,503. Now, expenditure. We are on the expenditure section. You want to determine the final budget. You have 923,219 plus supplementary budget. The supplementary budget is 39,959. When you sum it up, the final budget will be 923,219 plus 39,959. The total is 963,178. So the final budget is 963,178. Then 550,000 plus 93,239. The total is 643,239. And you don't have anything in this column. Nothing is here. So this will be name. Nothing is here. You have name. So when you sum up this column, the total of this 963,178 plus 643,239, we have 1,606,417. Then for the supplementary budget, the total, we have 39,959 plus 93,239. The total is 133,198. Then, having determined the supplementary budget, the next thing is the budget variation. Budget variation or variation on final budget. I've told you that to determine the variation of final budget, you have the difference between the final budget column and actual. The difference between the final budget column and actual will give us the variation on final budget. So for salaries, wages, and social benefits, then you have the variation to be 49,854. That is 963,178 minus 913,324. The difference is 49,854. 49,854. Then 643,239 minus 559,976. Then the difference is 83,263. 83,263. Then for the grants and contribution, then you have NE is 0 minus 281,340. Then you have minus 281,340. So minus 281,340. Then for depreciation, impairment, and amortization, the final budget is nil, which is 0. Is 0 minus 50,362. Then you have minus 50,362. Then for bad debts and charges, So you have is 0 minus 50,003. I mean, is 0 minus 10,809. Then you have minus 10,809. 10,809. For the public debt charges, you have is 0 minus 1,296. Then you have minus 1,296. For transfer to other government, we have is 0. The final budget is 0 minus 5,719, which is the actual. Then you have minus 5,719. Then you sum up the variation on the final budget, the total of the recurrent expenditure. The recurrent expenditure, we have 49,854 plus 83,263 minus 281,340 minus 50,362 minus 10,809 minus 1,296 minus 5,719. Then you have minus 216,409. Minus 216,409. That is for recurrent expenditure. The next thing is the capital expenditure based on sector. Remember, the capital expenditure is sectoral based. Now, based on sector. So, you are given the initial budget, but the supplementary is new. Initial is given, but supplementary is new. That means the final budget. So the final budget will be 87,339. For this, the supplementary is nil. The final will be 29,183. For this, supplementary is nil. The final will be 22,301. This one, the supplementary is nil. The final budget will be 52,379. So, the total of this, when you sum up this, will be 191,202. Now, we therefore want to determine the variation of final budget. Remember, the variation of final budget, I said it is the difference between the final budget column and the actual. So, for administrative sector expenditure, so we have 87,339 minus 88,704. It will be minus, it will be negative 1,365. Then 29,183 minus 25,330. It will be positive 3,853. 3,853. Then 22,301 minus 15,407. And that will give us 6,894. 6,894. Then 52,379 minus 35,139. And that will give us 17,240. 17,240. So when you sum up this variation on the budget, this is minus 1,365 plus 3,853 plus 6,894 plus 17,240. Then you have 26,622. Don't forget, this is negative. You are subtracting the negative. Now, total expenditure. I've told you that the total expenditure will be the sum of the recurrent expenditure and the sum of the capital expenditure. Therefore, 1,606,417 plus 191,202, and that will give us 1,797,619. So that is the total expenditure. Then for variations on the budget, the total recurrent is minus 216,409 minus this. If you now, this is negative, this is positive, minus this plus this, then you have minus 189,787 minus 189,787. Now, for the budget surplus or deficit, okay, for the let's determine for the total for supplementary budget. So for supplementary budget, the total of the expenditure is nil. The total expenditure is nil. Then the total capital expenditure is nil. Then but you have for the recurrent of 133,198 plus nil. So that means the total expenditure will still be 133,198. So now for surplus or deficit, I said you have the total revenue. Our total revenue in this column is 1,098,503 minus the total expenditure. Our total expenditure is 1,797,619. So the total expenditure exceeds the total revenue. So there will be a deficit of 699,116. So for supplementary budget column, there is no revenue, but you have the expenditure. So revenue of 0 minus expenditure of 133,198. So that means you have 133 minus 133,198. Then for variation on budget column, the revenue is negative minus 7,108 minus total expenditure 189,787. The total will be minus 196,889. 889. Now, that is all about the solution to the question. That is all about the solution to the question. To search for all my lectures, you may just type Ezikan Academy or Ezikan on the search menu of your YouTube app. Type Ezikan on the search menu of your YouTube app. When you type Ezikan Academy or Ezikan, or simply Ezikan, it will take you to my YouTube page. Then click on the page icon. Click on the page icon. Then it will take you to another environment. Then you click on playlist. Click on playlist. On the playlist column, you will see different playlists. Select the playlist of your choice to watch the related videos or videos on those videos I have on that particular playlist or course. Thanks.